Hello traders, Gary Wagner here. It is 9 o'clock in Honolulu, 2 o'clock in New York on Friday, 30th day of December 2022, and this is our Outlook 2023. First, we are going to take a detailed look at silver using daily, weekly, and monthly charts. This first chart is a daily area chart based upon the high. What we want to point out on this chart is the effect of the Federal Reserve as it raised rates over a period of time throughout the year with a rate at each FOMC meeting since March. First, we are going to take a detailed look at silver using daily, weekly, and monthly charts. This first chart is a daily area chart based upon the high. While it is evident that after hitting the highest price this year in March, silver prices fell dramatically from approximately $28 down to about $18 and then went into a rally mode. Both the correction and the rally were 100% attributable to action by the Federal Reserve. Our short-term forecast indicates that while silver has an extremely dynamic rally underway, this top that was recently hit at 24.55 could provide some technical resistance and the beginning of a correction. Now that we have created a Fibonacci retracement data set from the last leg of this rally, which would be from here to here, we want to calculate where pricing could go with a correction that was 38.2% or a shallower correction of 22.82. Our numbers are coming back for this is our interim term anywhere between $29 and $30, and I believe that is achievable by the first quarter of next year, February or March. The model we are looking at is a daily chart. We have fib retracement and extension, and we are looking at a smaller leg of the rally from September up to about $21. We're starting at the correction A18, and you can see this current leg has already gone 1.618 of wave 1, this being a wave 2. There is a fractal nature, of course, to Elliott wave. So what we need to do, knowing that we are looking for about $30 by February, is to look at a longer-term study. Our long-term study is based on analysis of a monthly chart. You can see that we do have an extension from $11 to about $30. We begin the extension at $17.50. There are three areas we could see silver go to over the second and third quarter of next year: $35, $42, or $46. In other words, I believe there is the potential for silver to challenge $50 per ounce next year. And now for our gold forecast, starting with our short-term view. It's obvious that we had a protracted multi-month rally, which first showed signs of abating in October, the first of three lows, then mid-October, and then finally on November the 3rd, we hit the lowest trading point and the beginning of a parabolic rise that took gold up to about 1785. The retracement from this point is 23% when we do our retracement ending here, and when we look at it through this entirety, it was 50% of the entire move. Nonetheless, we went back to rally mode, but something interesting happened. We found solid support at 1785 and absolute resistance at about 1840. What do I believe we'll see in the next short-term period by February? My sense is that gold is currently trading sideways, forming a base, consolidating, and that will result in a break above resistance at $1,837 per ounce, taking the precious yellow metal higher. And traders, now for my long-term forecast for gold throughout 2023 and possibly into Q1 of 2024. I am going to go into much more detail about the fractal waves that we'll talk about, the waves in between this long count. However, suffice it to say, we begin with a fib extension from 1446 to 2088, the all-time record high, comes in just above that. From there, we've got a tremendously long retracement. This particular study starts with a Fibonacci extension. We get our benchmark wave from this leg of a rally that began in April of 2020, 1446 to 2088, a multi-month correction where gold settles after a triple bottom at 1616, a 1-to-1, which is the shortest that it could possibly be, because one of the golden rules of Elliott wave is that wave 3 cannot be the shortest of any of the impulse waves. So I'm looking for, at a minimum, $2,200.60. However, it's more likely that it'll go as high as a 1.236% extension, and that would take us to $2,412. This has been Gary Wagner, wishing you, as always, good trading. Most importantly, I want to wish all of our subscribers a blessed and happy new year. We'll talk to you on Tuesday next year. Bye-bye.